Welcome back, fellow value investors. In this video, I'm going to be reviewing Alibaba and updating my research and my analysis in this company to make a decision whether I should buy more shares of Alibaba, hold my shares, or sell my shares. Alibaba is very much like Amazon. It's almost a direct copy, but they operate in China. China is the second biggest economy in the world. It continues to grow faster than the US economy. So it's definitely a big place with a big economy, and Alibaba is flourishing. I'm going to take a look at the company and take them through my process. I have an investing process, and I also try to value the stock based on free cash flows and earnings per share. I'll share that analysis with you. Do me a favor and like my video, subscribe to my channel, and I love comments. If you could comment on Alibaba, that'd be great. Let me know what you think of the company, what you like, what you don't like. I'd really appreciate that. Let's get into the video. As mentioned in the opening, Alibaba is like Amazon. It is an e-commerce company. They sell a variety of products, and Alibaba is doing a terrific job selling to their local markets, growing their supply chain. They have a cloud business. They have businesses that the Chinese economy really appreciates. So that's just great. I think their leadership's really good. They do a really nice job. I like their earnings reports. Overall, I just really like the company. I like being invested in a company in China. Most of my investments are in the United States. And although I don't put a major part of my investments outside the United States, it's good to diversify and have, a stock in China. And Alibaba happens to be that one stock. I also have a semiconductor company, and they're located in Taiwan. So just a couple of investments outside the US, and I think that's good diversification. So overall, I like the company, I like the industry, and I like the management team. Alibaba announced their earnings for the most recent quarter close, which was the quarter that closed on September 30th. And they have a fiscal year that this is actually their second quarter, where if you follow a calendar, we just closed the third quarter. So just be aware of that. The quarter, if you look at the 3 months ended, grew 9% for revenue. Very good. This is a big company. So to grow 9% is excellent. Year to date, they grew 11%, the revenues. So that's excellent. I'm very happy to see growth. One of the things that I've seen is that the company from 2018 up to 2022 has had terrific growth overall, but you could see that they were growing, and they kind of hit a wall between 21 and 22. I think part of that was that with COVID, the Chinese dealt with COVID differently. They had complete shutdowns, and that shut down the economy. I think that was a headwind for Alibaba. But I'm really happy to see that their revenue is growing. And if they can keep growing at that clip, you could see when you're a $126 billion company growing 11%, that's a very significant number. Growth is great. And if you're profitable in doing so, that's even better. And the earnings have been excellent year to date for Alibaba. Great job, Alibaba. Alibaba has a very strong balance sheet. They have a lot of cash and short-term securities. So they have plenty of cash to grow their business, to sustain any type of downturn, which I don't think they're going to experience in the next couple of years. They just experienced the downturn in China. So a lot of cash, and their debt is very reasonable. If you look at their total debt, I believe is around 24 billion. Here I'm highlighting unsecured notes that they have on their long-term debt, and they have short-term debt. I added up all those pieces, and I'll put those in my valuation model, but they have far more cash than they have debt. So it's a very strong balance sheet. Now, cash is king, and that's what I use for one of my principal valuations of a company. So let's take a look at the statement of cash flows for Alibaba. Year-to-date cash flow is very good. Almost 13 billion cash from operations for the first 6 months. And they spend a little bit on capital. Again, this is a e-commerce business, so they don't have to spend a ton of capital. And I'm going to use the net of those to annualize it and put it into my evaluation model that values Alibaba based on free cash flows. One additional note is that the company is buying back shares. Very good to see, especially since the stock price has been down this year. I'm glad to see they're buying back shares. They're paying a tiny dividend as well, but I'm really glad to see the share repurchases. I believe Alibaba is discounted by 83%. That's a pretty high discount. And it's based on free cash flows as well as earnings per share. Let me take you through how I got to that valuation and that discount. The company free cash flows for the first 6 months annualized, meaning take the first 6 months free cash and multiply times 2, is going to be $22.6 billion. And I'm going to grow those cash flows over the next 4 years by 10%. And then terminal value, all cash flows after year 4, I'm going to grow those by 3%. And it establishes an expected, all the cash flows that I expect in the future from Alibaba. I'm going to discount all those free cash flows to get to a net present value by 11%. And it gives me a net present value of all those free cash flows of 310 billion. The company has $85.5 billion of cash, short-term securities, notes, all kinds of short-term, assets that are very liquid. And that's 43% of the market cap, by the way. That's a signal to me that this company is very undervalued. When you have that much cash, short-term securities, compared to its full market cap, it's an undervalued company. They have $24 billion of debt. So what I do is I add the cash and I take away the debt to get to an equity value. So the cash flows plus cash minus debt gives us $371.8 billion. That gives us a share price of $146, but the current share price is $78. So big discount of 86% on Alibaba. The earnings per share look good for the next 4 quarters. It'll be $9.70, a PE of 18. They're trading at a far lower PE. And I just rationalize it in my mind. It's an e-commerce company. It's growing. It's in China. They're flourishing. They keep growing. Why would you have a PE historically less than 8? I just can't put an 8 there. 18, I think, is reasonable. That's where they should be trading. So I'm going to use 18. I'm going to grow those earnings by 3% and discount earnings per share to get to a share price of $138. Shares are trading at $78, so there's a 76% discount using earnings per share. I blend the two and I put more weight on free cash flow. 2/3 of the weight is on free cash flow and 1/3 on earnings per share to get 83% discount. Their balance sheet's in great health. It's less than 3 times EBITDA, which is one metric that I want. So a very strong balance sheet. So to invest in China, you need to be realistic about the tension between the US and China. And it's not a tension where we're at war. I'm in the United States, and what I observe, I'm not a political scientist. I could just share with you what I observe, is that these are the 2 big powers in the world. And they'll always put up a posture of strength, and they will criticize each other to show that we are not gonna back down, so to speak. That's my interpretation. I am not a political scientist. Now, we're going into an election year next year, and I'm sure the rhetoric against China is going to go up in the US. And I think that'll be a headwind on the BABA stock. If politicians begin to really say some pretty mean things about China, some pretty aggressive things about China, that may cause a sentiment about owning stocks in China to go down. And that may be a factor to keep the stock price suppressed in 2024. We will see, but I just wanted to point that out because being an investor in a Chinese stock, you need to be realistic about, what's going on with the attitude towards China that our leadership in the US has. Taking a look at the Alibaba stock and where it's traded over the last 12 months. In 2023, very early, the stock just rallied, just out of the gate. It just took off and it reached $120 per share, which was interesting. But ever since then, it's gone down significantly. It's down 14% if you measure the beginning of the year and compared to where it's at now. And keep in mind, that doesn't represent, the drop from 120 down to 78. It represents the very beginning. So it's dropped even more if you take this peak. They pay a dividend of 1.27 and they've been buying back a lot of shares. I see a significant discount in Alibaba, and so do others. But I think as I read, comments, and I'm on Reddit and Facebook, I think there's a consensus that what's holding back the stock is naturally the U.S. versus China tension. And I think for a U.S. investor investing outside the U.S., there should always be apprehension because you should always invest in stocks that and that you can predict how they're going to perform reasonably well. And as you get out of the country, it's harder to do that. So there should be some natural apprehension, but I think it's excessive when it comes to Chinese stocks. And just to be realistic, I don't think Chinese stocks will get the fair valuations if you compare their cash flows, earnings per share to their stock price. That's just reality. So should I invest more in Alibaba? And I'd like to answer that question. And first, it's all about the company. I do want to own a little part of Alibaba. I think the industry is great, especially the market they're serving. They're doing a really good job, and their management team is really good. The balance sheet's excellent, a lot of cash. They can keep growing. There isn't going to be any trouble in their growth, and they can expand. They have plenty of addressable market in China, but they can expand to other countries around Asia. They've expanded to Europe. You can buy products on Alibaba here in the United States. So great job there. Real big discount on Alibaba. So I'm going to keep buying shares in Alibaba. So that's my analysis on Alibaba. I hope you found it interesting. Do me a favor and comment. I'd love to hear your comments on Alibaba, what you think of the company, what you think of the stock. And please like my video and subscribe to my channel. I would really appreciate that. Thanks again for watching.